Record. Awesome. Okay, so just for the record, this Thursday, December 11th, this is our weekly technical workshops. Like I said, you guys are lucky, very, very small group, so just guys ask as many questions as you can, okay? Um, Once again, this session is for you guys. We're going to look at a few technical items. Really cool day to kind of analyze on Nasdaq. And we're going to be basically basing some of our analysis off of that. And what I want to do once we do this is maybe analyze a few other kind of like um, asset that I'm looking at. And then I would love to kind of see potential trades that you took if you traded, and kind of go back and forth and try to analyze how better it could have been, or if it was perfect, it's perfect. Okay, so just trying to be constructive in that sense. Does that work?
Yeah.
Awesome. Okay, so first of all, I'm gonna share my screen, share this desktop too. I'm just sharing in here. I'm just gonna share this. Awesome. You guys can see. Sweet. Okay, so obviously we all remember what happened with the Fed, right? Yesterday. Um, Basically Nasdaq was trading near all-time highs, as we all know. And then we had basically the Federal Reserve announcing its rate decision, which basically came in a tilt more dovish, right? Um, Now looking at the dot plot, the economic projections, we saw a lot of, in terms of the Fed fund rates in 2026, released at 3.4, which means one more rate cut next year. Then we had an uptick in growth, downtick in inflation, um, and a downtick in unemployment, if I'm not mistaken, right? Now, saying that we could potentially wait as well. So it's kind of like a dovish tilt, right? A lot of people were expecting a little bit more hawkish comment from Powell, but it looked like Trump called him ahead of that and said, like, hey, buddy, you better be dovish to help the market. Anyhow, um, pretty crazy trading day on yesterday, right? Because this is on Nasdaq futures, by the way. I'm looking at the 1 hour time frame. And when we analyze, by the way, before I dive into it, you always want to go kind of like higher time frame, okay? To kind of see what the longer term kind of trend is, right? Obviously, when we look at this, the overall trend is to the upside. And when you kind of tone it down a little bit, we were yesterday trading up to here. Yeah, so this is where we were trading yesterday ahead of the Fed, right? Looked like we were in kind of consolidation mode, um, near all-time highs. Some people were expecting more of a hawkish tilt, but again, better to wait on what's actually coming out, right? Oh, someone else trying to come in. So what happened? Well, initially we had kind of like a little bit of a squeeze, downtick, squeeze. Oh no, it was right here. I'm gonna try and bring it back. So we had a little bit kind of like consolidation, and then we squeeze all the way up to new highs. And this is why it's so important to kind of highlight your longer term support, resistance, main key levels. At the end of the day, like as much as we are a fundamental kind of school, right, macro school, we technicals are so important, like so important, right? So right off the bat, obviously I had kind of this big ass wedge, pardon my French, drawn up from there. I knew that we had kind of like this double top up here, that is essentially kind of a good zone of resistance, right? For when the price go revisit. I also had this kind of ascending wedge being drawn up like this. Okay. Um, and it's important to kind of continue kind of these lines, right? You don't really want to keep it, you don't really want to keep, for example, that wedge drafted like this. I can just pick it up. You don't really want to keep it there because often, as crazy as it might look, it actually acts as resistance or supports down the line. Okay. So we had kind of this big squeeze. Obviously, we had a crazy sell all the way down. And I'm not gonna lie, I was pretty pissed at myself because I sold that but I got shaken out. And then I kind of left, and then I looked, and it was all the way down to new levels. I was like, I can't believe I shorted that and didn't make all that. But that's part of the game. You got to shake it off and realize kind of what the moral of the story is and why didn't I make all of that. Um, and then we traded all the way down to this key level here. And that was what time? That was overnight, 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 overnight. And then we come back to the morning, which is essentially 6 a.m. right here. Okay. So now we're coming to the trading session, right? And then we look at Slack. We have basically Marco saying buy, 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 buy at the open. We're going to make new highs today. We're going to break that triple top, right? So us as traders, it's kind of like how, because it can be very tricky, right? It can be very tricky. And I got a bunch of message from some of you guys. I got a message from some people being like, "Hey, like what's going on? Like, what did Marco say to buy right away? Like what's happening?" And it's important to understand that these calls from Marco are to be taken with not. I don't want to say grain of salt, but it's like you need to consider, yes, you have the call, but it's not about like right away at that moment, at that time, buy it. You need to be able to assess your own entry with your own trading style. Okay. You need to understand that the market is not going to be there to give you the opportunity, but you need to really kind of define when it's a good time to buy or when it's a good time to sell. Okay. Because today looked like a grand scheme of thing, like the easiest day to just, oh, Marco said something, I buy and I made money. But especially trading futures or CFDs, or even stocks, sometimes it could have been like a little harder than expected, right? And I kind of want to go over like how are you supposed to kind of manage this? Okay. Well, first of all, um, Marco said that at what time? Because I kind of want to review this. It's super important because this is not going to be the last time this is going to happen, right? So Marco came in at 7:25 and said buy, 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 buy. Okay. So let's go up one more hour, which should bring us at 7, which is right now. Okay. So in a case here where Marco, it's around that time, right? Marco's like buy, buy, buy. And you kind of look at your computer, you're like, oh, I want to buy, I want to buy. Okay. So what most people would do, I'm telling you, what most people would do, they would go here and be like, okay, I'm buying because Marco's saying to buy. And most people that are day trading are having really tight stop loss and trade bigger size and are hoping for something kind of like this. Okay. And they're like, okay, maybe to new highs. Okay. Saying something like this. And this is a very bad idea. First of all, reason number one, you didn't wait for a proper setup, a proper convergence of technical aspect or fundamental aspect. You basically just tried to follow the trade, right? Marco's ideas or trade alerts needs to sound like a narrative to you. It needs to sound like a direction, right? When he's saying long NQ, long ES, long RTY, long YM, meaning all of the indices, it's like, okay, it's 7. Who knows if Marco bought it down here? Who knows if we bought it up here? Who the hell knows? He also has a much bigger account than you guys have, so he has a lot more wiggle room. Okay, and he's done it for way longer. Okay, now if we go down to 7:30, well, that's actually exactly at 7:30, so that's so accurate and it's so good. Okay, so reason number one why this is terrible. First of all, like I said, no setup. Second of all, how are you buying? You're buying on a squeeze. You're buying when the market goes up. And what's in rule number one when you want to buy? You need to buy when the market is going down. You buy on dips and you want to sell when the market rallies, go up, right? So second of all, here, if you just spread buy on that, terrible idea. Okay. 3, if you look at more technical perspective, right? You draw, for example, a fib, and I'll redraw it for you guys that are a little newer. For example, Ziad. We use fibs, which I use this one, by the way, trend-based fib extension, to kind of look at what are good support and resistance level or extensions for further kind of levels to look at. And what is a level or what is a metric that we use a lot for Nasdaq? The pocket, right? 61, 61.8, 65. Okay. Don't ask me why, but it just works. Okay, I've used it for so long and it works. It's just respected so much by Nasdaq. And right away, reason number three, it's right at the pocket. So what does that entail? That means that the market would essentially have a chance of being rejected at that price. We went up roughly 1 point something percent, 1.25% from the lows. We're at main reversal levels, right? It's really bad idea to buy because odds are we are potentially going to go down a little bit before we actually move higher if that's the case on the day. Okay, number four. Number three, you haven't waited for the open. So you're buying pre-open. If you buy pre-open, if you buy pre-open, you need to make sure that you're buying, like I said, on a dip. Okay. You do not want to buy pre-open when the market is all the way up there. Why? Number one, if stocks related to the index, for example, Nasdaq, Nvidia, Microsoft, Broadcom, if these guys open and gap down, like a day like today, what's going to happen is that the index Nasdaq is going to just correct itself right away before fresh round of buyers. So if you start buying up here, you're putting yourself in a really bad position. Okay, so that's number four. So safe to say, do not do that. And if you've done that, I get it. It's normal, but it's very important to kind of reiterate. When Marco does a trade idea, 7:30 in the morning, you look at your chart. It's not about you pressing buy right away. It's you looking because that's exactly the moment. It's you saying, okay, I need to buy. What do I need to do or what do I need to see to buy? Well, first of all, I want the market to kind of come back in that area, right? That's kind of like what I'm looking for. That's number one. Now it's like, what's a good reversal level from here? What we can do, obviously, is draw some fibs, right? We kind of like that. Now, a good area could be, if talking to me personally, those are good level to buy, right? Right here, it's the pocket, seems good. So you're kind of drafting now you're being patient. You're understanding that you don't want to buy when the market goes up. You want to buy when the market goes down, right? Very important. Okay. Um, Other good levels that could have been would have been, you see how like here all these wicks are being bought. Maybe you want to wait for the 38.2 and buy in that area, right? Okay, that makes sense. That makes sense. Did I work in that case today? Not necessarily, but it makes sense, right? You're waiting for market to go down. Okay. Now, when you look at this, you're like, okay, I could buy around this area, I could buy around this area. And then technically you look at it on a little bit bigger time frame, and you need to ask yourself before you enter a trade, when am I wrong? When would my buying be wrong? Okay. Well, first of all, if you look at bigger time frame, you understand that this is previous resistance, 1, 2, 3, 4, almost 5, 6, becoming support, right? Now it's becoming support. So this is a big, big, big level, right? So there's a lot of time where the market initially went up in there, rejected, came back, get rejected again, right? So it's not necessarily a surprise if the market kind of retests this and then kind of finds support. So realistically, on a really technical level, you're kind of like, if you significantly break that pivot point down here, then you can start being in some sort of trouble, right? You can think about that. Okay, in my case, I could be in some sort of trouble. Okay. Now, when you go back and you're like, okay, if I want to buy, I'm comfortable buying in this area. Okay. That's number one. You haven't touched anything. You haven't put your buy orders yet, right? You just kind of cognizant that you're looking to buy. This is a decent level. This is definitely a great level, right? And this is below this down here is an area where it starts getting dangerous, right? Because you might want to go all the way down, okay, on a day trading perspective, okay? Now, let's go down closer to kind of when the market opens. And obviously, you want to wait for the market to open, okay? In that case, because the market is all the way up. Okay, so if we keep it going, then we arrive, that's 8 p.m., 8:30, 9, right? Okay, now we're at 9. So the next candle is going to be the open. So now you're down here. Now, some people could be, I want to draft a nice little uptrend line here. I personally think I don't like that. I never do this. And funny enough, I was tempted to do that this morning. I am not joking. So I was like, oh, this is a nice little support here. And you have the uptrend line. This is a nice little convergence of level. That could make sense to buy. Yes, but Nasdaq, whenever there's big structural shift in the market from big macroeconomic events, will tend to try to really screw you up. Okay. There's going to be a lot of manipulation, a lot of manipulation. Okay. So better not do a small little trend line like this. Okay. Now you have your kind of like little ideology of like, I want to buy, I want the market to go down. I have some key levels. I know where I kind of wrong, right? Other items I want to look at. I want to see if some of the movement down have a little bit less of conviction on the RSI. Great. What else should I look at? And that's the question I'm asking to you guys. What else should I look at as the market opens into the session? Anyone knows?
The market opening.
Yeah, absolutely, absolutely. I'm talking about other than this right now, but yes, absolutely. The type of opening for market profile,
Type of
yes,
opening, yeah.
absolutely, absolutely. But that's not what I'm asking. But yes, that's a good point. What else?
Who is in control?
Yeah, I mean
Buyers,
buyers or sellers.
buyers
Yeah,
or
I mean,
sellers?
yeah. I mean, yeah, that makes sense. Yes, that's not the answer I'm looking for, but yes, sure, another a good
Can
point.
you,
Absolutely.
what was your question, Nick? I didn't hear it well.
So, so out of everything that we're looking at right now, right, on a technical perspective, we have the fundamental idea that we want to buy, right? What else kind of do we want to look at um, as the market opens into the session for confirmation on when to buy, as per
Volume?
Marco's recommendation?
Volume?
Yeah, that's one of them. But I want to go further. Like what, like a really important, probably the most important
The volume
confirmation.
profile,
Yes, but that's not it. But that's also
Li-
good points.
where the liquidity
Liquidity?
is.
Okay,
Liquidity?
I'm gonna go. It's a little bit more macro than technical, this one. A little bit more macro than technical.
More macro than technical.
Yeah,
Uh,
one more chance. What's okay? I'm gonna try to give you a cue. What's Nasdaq? It's an index.
Technological.
Oh,
It's an
you
index,
meant
right?
correlation with other with other stocks.
Yes. Yes, exactly.
So you wanted to look at Nvidia, and Nvidia gapped down a lot.
Exactly. Okay. So let's do a Nasdaq index by weighted stock. I just want to show you kind of like which one are the most important. Uh,
I thought you were
um,
referring just to Nasdaq at the beginning, but that's why
it's all
I was
good.
like,
It's all
okay,
good. What are the most weighted stock in Nasdaq index? Okay, 100 companies by weight. Okay, super. So, absolutely, like Danny said, what we have all of this, we have our ideology, we get it. Now we need to look at cross-market correlations. Okay, we need to look at cross-market correlation. Now, most important ones, right? Nasdaq number one is Nvidia. Why? For people that are a little new, I don't know if you know that, but Nasdaq is an index of the 100 highest by market cap tech stock. Okay, so it takes 100 tech company, 100 tech companies, and they put it into one single index. Okay, that represents these 100 companies all together, and they all have different weights in it depending on how valuable they are. Okay, in a nutshell. Now, the most important ones, the one that has the most significance for Nasdaq index is Nvidia because it's the biggest one, right? It has 13% weight. So it means Nvidia itself is 13% of Nasdaq. So every time it moves, Nasdaq moves a lot. Okay. So what you want to do, obviously, is you want to have Nvidia on your chart. Now another one, Apple, right?
Apple, right? Okay, yeah.
Apple is big. I have Oracle here because we were trading Oracle today. But in that case, we're going to look at Apple. So you have Apple, right? Up here. Then Alphabet, Microsoft, right? Obviously, you can have Amazon, Broadcom, Meta. What you can do is then you have kind of your list up here, and then you can kind of follow it through, okay? But now you have a good idea. So you need to follow this, okay? And this is what I'm saying by whenever you go into that trade, you need to understand that some of these stocks might kind of go down ahead. And if these stocks go down, Nasdaq is going to pull. Okay. So that'll be get into the trading session, right? Let's go in. The market opens. Boom. This is the market open. That's 9. That's 9. Sorry. So I need to go 2 more. I'm free on 15 minutes. And then the market opens right now. Okay. Big straight, big leg down. Okay. And then looking at everything on a technical side, like, okay, when am I level? It looks like it's kind of supported. This could be tempting for long, right? Especially if you're someone that kind of like went like this on the wedge, but then you're like, oh, it's kind of breaking. I'm not too sure. But that's kind of like not where you get the most confirmation, right? Where you would tend to get more confirmation if you look at the rest of the stocks and you're seeing Nvidia gapping down, you're seeing Microsoft up here, up here, going down heavy. You're seeing Apple going down, and I'm not talking like going down a little bit. Like it's like an open drive down, like heavy, right? Boom, you're seeing Microsoft gap down. So when that happens, you need to tell yourself, I need to see some sort of reversal pattern or some sort of signals from these big tech stocks to confirm to me that it's time to go up. Because if Nvidia starts pushing up, Alphabet, Google, Apple, Meta, Microsoft, if they start pushing up, this is what's going to make Nasdaq go up, right? It's not Nasdaq that makes the stock go up. It's the other way around, okay? So right away, you're seeing these big, heavy push, right? And looking at more technically, these candles are not telling you, oh, wow, it's a really nice reversal candle. It's just like down, like down heavy, not a really big wick, small wicks. You know, it's really pulling heavy down, right? So as we open, you see this. Could you be tempted to buy? Yes, I could see why you would be tempted. Now, is the correlation telling you? Not at all. It's not, right? So you kind of rather want to be patient. Now, this is the 15-minute. Obviously, if I want to go to a little smaller time frame, let's say 5 minutes, because I don't trade on the 5 minutes when that's happening. So you have that little consolidation at this level, right? Usually when you see this, it's not really a reversal because you want to reverse when you go down and then come back fairly quickly, okay? This is not having like a second candle going all the way up and being whacked down again, and then having a doji candle like this at a point of control. This is not what a reversal really looks like, okay? So then you see this, and then we're talking 945, and if we revert to the other ones, where's 945? 945, we have another downtick. 945, we have another downtick. 945, we have another big red candle, and we're kind of consolidating here on Microsoft. Okay, so right away we're kind of like, okay, this big one here is still dangerous. Now, did I buy? Am I looking to buy at the pocket? That's me, absolutely. Okay, so then before this happened, obviously you have a decent reason if technically you're following a plan that works a lot to kind of say, okay, now I've waited for the market to go down to my price. I'm buying this. where am I wrong? If we start breaking this, right? Where am I wrong? I'm wrong when I start going below this kind of gap on higher time frame that I drew myself, right? But this is me trading really wide. That's my style. Okay, that's my style. It's not necessarily, and that's the way I trade Nasdaq. Now, is it for everyone? Not at all. Okay, because you need to have a bigger account to be able to do that. Okay, and with the goal to try to hit some new all-time highs, for me, it's like the extension that it would have hit. But again, that's my style. This is what I do. I don't take one single trade. I add in, I compound in, and then I scale out of the position. Right now, this is one way. If you want to kind of like almost like intraday swing, right? Now, is it the most comfortable position? Not necessarily, because you still have the other tech stock kind of telling you we're having a hard time here. We're still pushing down. Okay, so not the perfect confirmation at all. Now we enter the next few candles at 10, right? 10, you see nice green candle. 10, nice green candle. More consolidation. Nice green candle. Now you're starting to see the market giving you some reactive buying, right? There's some buying coming in, especially when you see a big one from Apple. Especially when you see, I mean, those are not so big, but you see some legit reactive buying, right? And when you look at Nasdaq, you're starting to come off. What time is it? This is 9, and we have one more. Boom, and you see nice reactive buying. You see it, right? It all works together, correct? So you start seeing the push. Now you're like, okay, now I need to find a good setup for me to go long. I need to find a good reason. Now, correlation make it sound like it looks great. Technically, this is nasty shakeout liquidity sweep, right? At the end of the day, that it's not empty. It comes from stocks, kind of the main stock of the index coming off, right? So now it's time to go into the nitty-gritty and really want to start buying. Now, to add to the confirmation, right? If you look at different kind of indicators, you look at kind of the RSI, we're oversold. We haven't really pushed lower than this, right? So we still have like, if it would have been down here, it would have been a little bit more scary. But now we haven't printed a new low, right? It's still, that downtick doesn't have as much conviction as this one, even though this one was overnight. Okay, so it's looking good. Now, could you be buying right now around this area here? Be like, hey, anywhere I can buy here makes sense? Absolutely. Okay. Now, could you wait a little bit more and see more of a kind of like a pattern to buy? Yes, you can. But once you see a really big green candle, if you're aiming for new session highs and you know you're wrong down here, your risk reward is amazing, right? So depending on where you kind of want to buy, you want to buy, like, even if you buy all the way up here, which I would not do, I would wait for the market to go down first, right? In that case, I mean, if we go through a minute, right? For example, we had this big green candle. I think the best would have been to go kind of up here. The market goes up and then comes back down and then goes back up. Now your risk reward is good because you can have a risk reward down to here, and then you're trying to aim to go all the way to new session highs, right? And that's kind of the plan. Why is this so good? Well, at that moment you're buying, it's essentially around 10:03. You look at 10:03, it's pretty green, and I'm gonna go down to 5 minutes just to kind of prove it even more. 10:03, we're all the way up here, so we're looking better. 10:03, we had a really fat squeeze on Apple. Oh, I'm still on a 15, sorry. 10:03, really big green candle. See, it's looking much better. And this is because we know we want to buy, right? This trade is much harder if Marco's not there to tell you to buy. I can tell you that for free. But now we have the opportunity to have Marco to tell us to buy, right? So that's what you're looking for. You're not looking to just throw a dart and buy. Like, okay, now I'm seeing the consolidation I need. Now I'm seeing the reactive buying that I need, right? And then you look everywhere, it's the same. It's the same, right? This is where you can start loading up, right? And then hoping for this big squeeze to new highs. Okay, so you have your stop loss, you buy. Now, in the case where you're very, very, very disciplined, right? And the market never gives you kind of like the pull down for you to buy, right? Because that's possible. That's totally possible, right? In that case, you're like, okay, I missed this long, right? Now I'm seeing the market doing tremendously well. And it's totally normal. Like this is something that's totally normal, right? You're seeing the market essentially going up without you. And now it's around 10:15. You're looking at the rest of the stocks, they're looking very healthy. It looks like it's the time for it to load back up. What should you do? What should you do? You want to wait for the market to come down. And Nasdaq will do that. Nasdaq will do that. It's never going to just go down and never come back. It will always shake you out before it really goes, right? It's making your life difficult, right? It's an emotional game. So you want to make sure that you buy on a downtick. If you miss that first buy opportunity here, if and only if, right? Now where do we buy? Right? That's a good question. How can we know where to buy? Well, I would personally draft another fib extension, right? I would personally, I did the wrong side, sorry. I would draft another fib. And here, I'm not trying to look for this one. No, it's not even this one. From 1 to 2. Oh, because that's the wrong one. Because I don't have the top, that's why. So if I look at whenever it gets rejected, it goes up and up and up. Now you want to look at kind of like what's the potential resistance level, right? So you're waiting for a pull, and now you're probably looking like telling yourself, "Oh my God, like I missed it. We're about to cross the open. I missed it, right?" And that's normal. That's the emotion you get. But the last thing you want to do is start buying now because you think you're missing it, you're gonna miss it. That's the last thing you want to do. You always want to wait and be patient. And kind of the narrative you want to tell yourself is, if I missed it, I missed it. That's it. Right? There's going to be a new trade tomorrow. There's going to be a new trade next week, right? Or I might get a better price soon enough. Okay. So what you want to do is you want to be patient. And this is very hard at the beginning, guys. It's very hard. And you want to start buying when you go back into this area, right? What's a good area to kind of buy? Well, this kind of makes sense, right? You have this nice little consolidation where you could buy down here. Now, if I make this kind of more
Nick,
border.
sorry, why should I wait till it goes back down again if I can buy around like a 10:30, no?
That's a good question. Why should you wait until it goes down if you
You
buy
can buy
around
like there.
10:30?
Yeah, somewhere
Right
there.
there.
Where the long
So,
candle is lower even.
so like here?
Lower. You see that the long green candle? Yeah, somewhere there, let's say, or even before. Yeah.
I mean, if you buy here, it's fine. You're good to go,
Yeah.
right? Like your risk reward is good. Now, if you
But if
buy
I
it, like
missed, okay.
if you missed it, right?
Okay.
If you missed it, the last thing you want to do is to buy it back at the point of control. You buy it here. You're so late to the trade, right? Now you want to either say, I missed it, that's it, I'm out, or you want to be okay, I'm going to wait for a nice retracement, right? Looking once again to confirm with the correlation of the other stocks to buy that dip. Okay. Now, like I mentioned, what would be a good dip? Well, you have this nice little level here where the market initially tested, was bought, right? So this nice little area around here. You want to draft your fibs to try to see kind of, because you just want to see where the top is. Okay, so that seems to be the top. So now what you want to do from that movement, what's a good reversal level? So to me, this area is really good, right? You have kind of this nice little, previous support Now coming back to support, you have this pocket here. So a good price to be patient enough to buy around here, stop loss at lows, and try to buy all the way to new session highs, right? Now, do you have to be extremely specific? I mean, you can be a little bit more kind of, how to say, not wide, but you can be like, look, this whole zone kind of seems very good to me, right? The zone where I have the 50% fib and the pocket and my little area here. This is a great place to wait for the price to come to me and then buy, okay? And this is why it's so important to be patient. Because if on the opposite, you bought here, where's your stop loss realistically? Right? If you're not patient enough and you're just saying to yourself, I'm buying up here because I missed it. Like, do you really want to do that type of trade? Does it make sense on a risk reward perspective? Never. It's like a 1-to-1, right?
No.
And like what? If you want to have a big one, you're going to put yourself like here just because for the sake of it. You can't, because the stop loss needs to be, it needs to be a real stop loss. The stop loss the stop loss is not there just because you want to risk maximum 1% and I'm putting it there. No, the stop loss needs to be a place where you know you are fully wrong when it gets there. So there's no more point to be in the trade. Right now, if you buy there, your stop loss is here, the trade is still valid if it goes to your price. So why would that be your stop loss, right? So that's why that framing doesn't make sense to buy here. So you want to wait for the market to go down up to here. So in that case that you were patient enough, went exactly to that area, this is exactly where you want to buy, right? And then right away you're seeing good reactive buying. This is great. Now, a lot of you guys, and it's normal, what would have been done is as soon as it starts going up, you put your stop loss to scratch.
Yeah.
The stress of losing, okay? Especially on days like today, the market will not give it to you easy. Big structural shift from macro days, from FOMC, CPI, non-farm payroll, big institution piling in money and will manufacturing different prices, right? And they will really try to shake you out of trades. So the last thing you want to do is put your stop loss at scratch here. You want to let the trade breathe. Okay, you want to let it breathe. Okay, so you put it up here. Your stop loss is there. Why? Because it's very important to understand. If the price goes back here, you're not wrong. You're not wrong at all. This trade is still valid, right? So again, the stop loss needs to be where you are fully wrong, not when you're not comfortable anymore buying or selling. So in that case, this is not a good color at all. Way too light. It feels like my girlfriend used my my colors here. What is this little pink blue? So even if the market does that, I'm just gonna change that color. This is crazy. Even if the market does that, your trade's not wrong, right? You're still valid. Look at what happened here. 1, 2, 3, 4, right? The trade is still valid. So you want to remain in that trade and you want to be patient. Now, when you see the market go back down here, what can give you more confidence to stay into the trade? And now I'm asking you guys, what can give you more confidence that you're still good to be in that trade?
The market correlation again.
Yes, absolutely. Number one, market correlation. Quickly, also RSI, not too oversold, right? It's looking good. There's nothing out of whack. And absolutely, you look at the correlations, right? You look at the correlations.
Continuously compare, right?
And yeah, exactly. And then you look here, it's looking healthy, consolidating, looking like it's breaking higher. Here, a little scarier on that side. Now, NVIDIA, which is the most important, is really driving upwards, right? Or it's not breaking to new lows. You're seeing it's not breaking clear structure to the downside, especially on here, especially up here.
And there.
Up here, yet not yet. This is at 1, so not yet. So you're still good, right? You're still good. So you stay into the trade, and this is not easy. Look at this, right? It's not an easy trade. But once again, this is at 12. Now it's looking very good. But even when it was 11.50, there was nothing alarming, right? Look where we are. An Apple all the way up here. Look where we are, right? 11.50. We're right here. We're still consoling. We haven't broke anything, right? Here it's probably went down a little bit. Where is it? At 11.50, you're still coming off the lows, right? You're doing well. Same thing here, 11.50. You're still haven't broken anything major. So, and then you have the other stocks, Tesla. You have Meta, all the other ones, right? So that trade is still very valid. And then you're finally seeing that move break. Now, when do you move your stop loss to scratch? Very important, right? When do you want to do that? Well, first of all, one of the main resistance that's going to come is the opening, right? I always tell you guys, you need to make sure that you have your open price kind of drawn up onto the chart because it's a main area of attraction. It's a main area that's going to tell you if the market will continue either heavily to the upside or the downside. It's a very, very key level. So when would you want to bring kind of your stop loss at scratch? Before you even think about putting yourself at scratch, you kind of want to be able to take some profit along the way. So a good level to take profit along the way is definitely at the open. If you have enough size that you can scale out, meaning if you bought one lot, you can take out 0.1 lot, 0.2 lots at the open because you know you're going to have reactive selling there. Okay. Market never just goes through the open like nothing happened. There's always a little shakeout, little reactive selling. Okay. You want to be able to kind of scale at resistance. So to me, good areas to scale out are the open, are new all-time highs. No, sorry, that's that. New cyclical highs, new session highs. The big wedge that we have on higher time frame, and obviously the triple top that we have, which is down here, right? And then you have kind of your glory all the way to the top. So you kind of want to be able to scale all the way out. Now, if you cannot, you only have one position, a little trickier. But you'll want to hold, and you're probably not going to try to wait all the way to the top. You're going to try to eventually punch at this high here, or you're going to be really kind of done all the way up here just to make sure, right? But the goal is to be able to scale out of these trades. CFDs you can, futures you can, same thing with options, so on and so forth, okay? So once you start seeing a break of structure or a significant shift in the narrative, then you can start moving your stop loss at scratch. Now, could you argue that, like, you see how technical this thing is? So can you argue that once you start breaking this downward wedge, the open price, then you can start moving your stop loss to scratch because it looks like truly the market is simply going to keep on moving up and up and up? Absolutely, right? So in that case, the time when you want to start moving your stop loss at scratch is when you see the market finally breaking, going into this new highs. When you start seeing this, absolutely, move your stop loss at scratch to make sure you've secured already a portion of your positions and you're aiming for the big run, right? Now, if you can, you take profit here. Why? Because it's a main resistance. What you're going to see, and the reason why I'm saying this is because you always want to, once again, sell / take profit when the market goes up, not when it goes down. Because emotionally, when you're new, you're going to tend to want to take profit when the market goes down. It's going to, I don't want to lose too much, and then you take profit. But no, you want to take profit when the market really goes up, right? So what's going to happen here, as you can see, hit resistance, little shakeout, normal, then you're going to break. Then you're going to have a little shakeout. Then you're going to break. Then you're going to have a shakeout. Then you're going to break. Then you have a bigger shakeout. And you're going to break all the way to here. And then whatever's going to happen here is going to happen. It depends. Okay. But this technically, that's kind of how it's going to go. So you want to take profit when the market goes up, not whenever it comes down here. You don't want to be like, oh, it goes up, it's nice. Oh, it goes down. Oh, no. I don't want to lose too much. I take profit. No, you want to really this is like the perfect way to trade. This is the best way to trade. This is where you get the most bang for your buck, right? So in that case, again, we're talking in perfect environment, but the goal is to have no emotions and just say, what's the play by play for me to perform the best? This is it, right? So in that case, as you mentioned, we start consolidating, we break, amazing, took some profit along the way. Now I'm at scratch. Now you're seeing once again the nice little downtick, right? Then you're gonna boom, break it. What time is it at that point? Okay, no, we're good to go. And then you end up finding some resistance coming down, then you go. So you would have punched out up here. You would have took a nice profit as the market go up. Perfect. And then you're aiming for the big home run to the triple top. Then you want to take profit, right? Because you see these areas are very key. And then if you have one of those soldiers, well, that suck. But if you want to be very, 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 well, a lot more conservative in the day, this is a great level, right? Now, if you're hoping for a big break, very important to understand where the time and place, where you are in the day, right? When you arrive around here, it's 4:15 p.m., right? Very important to understand what's going on. The odds of the market going up past this in the last 45 minutes, very, very, very small. Very, very, very small, right? And then you had obviously news coming out after the around like around like 5, right?
Before 5, yeah.
Yeah, so if you're telling me that this is noon by right here, much different story. I can try to grab it all the way up. Now it's very close to the session ending, right? Maybe it's time for you to punch out of the trade, especially with news coming out right after the session closes, right? Now, if you punched out all the way along the way, I mean, you have 1/10 of your position up, and then you lose that. It sucks. You still made 90% of your position. This is tremendous. It's amazing, right? So this is kind of like how you really want to deal with this. So to kind of, because I know other people kind of came in, very, very important to reiterate that number one, when Marco gives an alert in the morning, pre-open, about buying different stocks, about buying indices, you do not want to just press on the buy button. You want to have your own setup, your own reason to buy, right? You cannot be too excited. You need to think about it as a narrative for the day. I'm buying, so I see Marco, right? Guys, I'm already long futures. We buy Nasdaq, NQ, we buy RTY, ES, YM on futures. The first thing you need to tell you is like, okay, today I'm buying dips. So let me find a good dip that makes sense to buy. And then you go through the whole process that we just went through, right? You went from the technicals, higher time frame, smaller time frame. You look at the correlations, you look at your technicals, so on and so forth. Okay, very important. Now, another reason to tell you that you need to punch out, especially when it's 450, you see that big uptick here at the end of the session, right? To new highs. If you're attempting to break it, and then you see the RSI doing this at the end of the session, well, you're seeing bearish divergence at new highs, just punch out and get it out of the way. Yeah, it's tremendous trade. Okay? And that's basically how you want to see it. Does that make sense? Do you have any questions, guys, on all of that?
What news did you mention, Nick, by 5 o'clock? That was on December 10th, not today, right?
It's Broadcom.
Yeah, correct.
Ah, that one. Okay.
Correct.
Okay, so correlation type of news. Okay.
Yeah, absolutely.
Okay. I was thinking about the FOMC and Nasdaq the day before. Sorry.
No.
Yeah, okay. Yeah, gotcha.
Any other question, guys?
I have a question. You were saying when to start take profits. Would you consider taking profits at the POC?
Yeah, absolutely. That's a good one too. Yeah, for sure. Again, it depends what your type of trade is, right?
Because
This is for
I got out most of my position at the POC before that big down red shakeout.
like here. Is that
No,
where you got out?
before. So I took the trade from the bottom till the POC.
Oh, like here, this one.
Yeah,
Oh, but this is
and
amazing,
then
right?
I put my stop loss at scratch with the
Yeah.
remainder two because I had a couple of contracts there, but and obviously I got triggered with that uh, big
Yeah.
red shake. I don't know if you call it shakeout or
Like down here.
yeah, the whole move
So so
where
here's
you could
why,
have
okay,
you rinsed and repeated the trade actually.
yeah, so here's why it's important, right? It's like you need to understand like and that's why it's so important to understand what's the purpose of a stop loss, right? And I understand that we're not trying to lose money here. I get that, and it's a good way to see it. But the purpose of a stop loss is there to tell you when you're wrong, right? In that case, if you had the first good trade, which was to buy this dip here, right, which was the hardest one, what was the best decision, obviously, for the better price, and you took profit at the resistance, right? The previous, like that supported at the seller's remorse and the big point of control. Beautiful,
Yeah.
wonderful trade. Like, like it's beautiful trade, right? Like most people are just done for the day when that's done, right? Now, if you bought a little higher, right, because you were a little later, and then you put your stop loss at scratch, because in your own trade, you essentially went like this because you were a little late, right? And then you buy up here because you get a little too FOMO-y. You're like, oh my God, right? Then you look at your trade, that risk reward is not so great. It's 1-to-1, right? And if you're basically trading very smaller time frame, you're like, oh, I'm looking for a good level, this is when are you wrong? Are you wrong when the market comes back down here or here or here? Like, not really, right? There's nothing telling me that this is wrong. So once again, if you want to do this, you're almost better to just punch out and then just re-enter on dips, right? With a better kind of risk reward and understanding it. You don't have to put the same amount of size because you had a really good trade and you bring it here, stop loss at lows, and then you get into new highs, right? And once again, this is also good, like taking that movement, right? Like I'm not saying for every single time you want to go for the home run, like not at all. Reason why is because we had the idea that we're going to break that triple top, and it was just like a day. It was going to be an imbalanced day, a day where we really break out of balance. That was kind of the idea, right?
Well,
Um, but yeah,
the issue is like I would have held it longer, but with options, when you have that big red move down, it really kills your
absolutely,
premium and like you turn your winning trade into a losing trade pretty fast. So
absolutely. That's a very good point, also, right? This is a fucking killer for your options. What is that rectangle? I thought that's an angle rectangle. That's weird. But
that's why
this
I
this is
couldn't
a
hold it
killer.
there. So I had to put my scratch stop loss.
Yeah, I mean that's fair, right? And that's fair point. Now, can you try to re-enter at some point? Yes, you can, but that's the payoff of a trading option versus trading futures or vice versa, right? Options is great because you tend to have a little bit less of shakeouts when you trade up, a lot less shakeouts when you trade options. But the cool thing with futures is that you can hold them and it doesn't change anything on your price. Market can be sideways for 5 hours and it doesn't change anything. If it does that for options, you lose 100% of it, right? And this is why you knowing your product, right? But no, definitely it looks easy of a day when you think about it, but it was not an easy execution, not at all. And again, like it's so important, like this framework, and this is like especially the newer students, right? Well, you're guys are all fairly new, other than Tony, but this is where it's so important to understand how to navigate Marco's trade alerts, right? And how to navigate Marco's trade alerts. Do not press on a buy or sell button when it happens. You need to have your own structure, your own setups, your own way of doing things with your own style, right? And you do that. How do you do that? Well, you need to start learning and looking at all the self-learning modules, so on and so forth, and then you'll be able to kind of figure out yourself from that. Okay.
Basically, it's not like a copy paste. It's like consciously, whatever we do, we just get confirmation by Marco's narratives, right?
Yes, absolutely.
Yeah, that's
Absolutely.
yeah, that
Exactly.
otherwise the learning and studying and realizing all these things wouldn't make sense, right?
Exactly.
Yeah.
Now, when it's like, hey guys, buying NQ at 25,550,
I know what he's
different,
talking about. Yeah.
different,
Cool.
right? When it's like, when you wake up at 8:30 and you're like, oh fuck, at 7:30 you said to buy and now we're here. It's like, and I get it. I was exactly in your shoes. Like, guys, I totally get it. I get the FOMO. I get the, oh my God, I cannot miss it, right? So like breathe, relax, make sure you have your system that you understand. If I want to buy, I need to buy on a dip. If I want to buy and it's around the open, let me wait to see the type of open. Let me look at, draw some good potential dips that I could buy, good technical level that would support my bias to go long. When am I wrong for a potential stop loss? Let's look at the cross market correlation. Let's look at the stocks that are part of that index, right? Let me look at also what's kind of the next macro indicators coming out. Is there an ISM coming out at 10 a.m. that I don't know? Because if there's ISM coming out at 10 a.m., maybe I'll wait for that data to come out before I buy, right? Depending on where the market is, so on and so forth. Okay. So I'm very glad I did this session today, because this is so important for you guys to be able to monetize this experience properly. And it's normal if you made the mistake today. It's totally normal. Like, don't hit your head for it. It's normal. The great thing about it is that those happen all the time. And this is what I'm saying to you guys over and over again. It doesn't matter if you missed it today. There's going to be another one tomorrow, another one next week, another one the week after, so on and so forth. Okay. Are there some better than others? Yes, absolutely. Right. But this is a great example of how you need to manage those, and also great technical ways of utilizing proper entries and weights and so on and so forth. Okay.
Yeah, this is a beautiful one. Where did you put your stop loss here, Nick?
I mean, me, like, again, my style, I'm
I
just
think you went too
whenever
much down, right?
I
Yeah,
was
yeah,
like
that's what I
lower,
assumed.
below
Yeah,
this new lows, right? New
yeah,
lows
yeah,
where it was like kind of telling me,
that's what I assumed. Yeah.
yeah, new lows,
Okay.
exactly. But again,
You
it's
just
super
like
important. It's super important, like, guys, like the importance of knowing when you're wrong and sticking to it is so key, because psychologically, if you're volatile with your stop loss, meaning you don't have a set stop loss, emotion is going to take over. Your emotion is going to take over. And I'm not talking about options here. I'm talking about like more, especially futures. Well, it works with options, but for that specific case, if you go with I'm buying right now and I don't really know when I'm wrong, you're going to be freaked out by like, oh, you're going to be in a little bit of a drawdown and then you're going to want to punch out and then you're going to go without you, right? If you kind of like, hey, you know what? I trust my process. I know that even if it keeps on ranging here, my trade is still right. And I'm wrong when I go down here, then, psychologically, it's much better. Okay. So make sure at any point in time, every trade you take, you need to know when you're wrong and need to know when to punch out. Do not go into a trade not knowing when the market is telling you that you're wrong. Very important. Okay. Like, I cannot stress that enough, especially at the beginning. Especially at the beginning. I mean, anytime, but especially at the beginning, because it's super emotional. And this is one way to kind of get that emotion out. And then
This
the
one.
cool thing that you can do also is that something that's really important is you need to write your diary, right? Every day. So you finish your day trading session. And if you're like, oh, today I had a great trade. I put my stop loss. I respected it. Emotionally, it felt like I really wanted to punch out when that consolidation happened and it retraced, but I stuck to my point and market didn't tell me I was wrong. So I sent the trade and it went up. And then next time, let's do the same thing. Or the opposite. Fuck. I punched out, market went out without me. This is wrong. What did I do wrong? It's like you were emotional. Why? Because I didn't have a set plan, right? Now, when you have a set plan, it doesn't happen. So when you write it down, at some point, it gets into your brain and you don't do these mistakes over and over again. Okay?
Okay.
Other question, guys? Question, guys? No?
Yeah, Nick, can you tell me if you bought on dips and where you bought? And then when you did buy, did you always check to make sure that the correlations were still working before you bought on a dip?
Yeah, I bought, like I said at the beginning, I bought around the pocket. Like down here.
Okay, so
Initially,
you didn't reload.
I bought early.
Okay, so you didn't reload on some of those dips.
Those one? Those one? No, I didn't.
What about higher up, like where you had your targets?
Down here.
Did you?
No, I add on the way down. I don't add. I mean, it's can be seen good or bad, but I added on the downside. I didn't add when it went up. I punch out when it goes up. I don't add when it goes up.
So you
But I
loaded
could
up-
have. Say
You
again.
loaded up all near the bottom, and then you just empty it out slowly on your way top.
Yes, and I could have bought again here, but again, it can't be perfect at all times, right?
So what made you confident to load up all at the beginning and not add as you went on the way up?
I mean, because I had enough size on it. I was trading other things. I had Broadcom on. I had BTC on, right? I was on BTC. I was on Broadcom. So I had enough size for the day, all for the same type of asset. So it's important also to understand, like when you buy and you take risk, it's like I'm buying they're all correlated. So if like Broadcom start tanking, or if Nasdaq start tanking, Broadcom's going to go down, and odds are BTC is going to go down too. So it's like, how much risk am I taking here, right? Like I need to be kind of diligent if I'm trading different items at the same time. So it's like I kind of maxed out for my daily, right? Now, perfect ways have been to add, yes, but you know, I'm also not perfect. I hope one day, but no, I'm never gonna happen. But
at the same time, I noticed you posted early in the morning that you missed the short, which I wasn't even thinking short because I was thinking about what Marco said going long. But what made you not take that short?
The long bias, right? The long bias, and this is kind of, and it's okay, right? You cannot be in every trade, but it's like, could I have taken that short? Yes. Was that short the best trade of the day? No, because as you can clearly see, this was just a manufactured sell. It wasn't a real structural sell, right? It was just like bought back over the overnight session, Asian session, London session, and then you had obviously institution coming in. And this is where it's important to understand what institution do, right? It's very important to go to your point, right? Like you see this buyback. If you have hedge fund wanting to buy billions of dollars, do you think they're going to buy up here? Realistically, never, right? Never. They want to buy they want to buy at discount. They want to sell at premium. You never want to buy right at the point of control. Big positions like that. I'm not talking like NFP comes out and we're here and then it rips. No, I'm talking like the news has happened. So they're going to want to shake out retail, create that liquidity with all of these buyers punching out, all these people chasing the sell, and then they're going to guard that liquidity to the upside. And then manufacturers, people getting out. And then when everyone's fucking fed up, then they really put the printer on, right? So why? All honesty, wasn't necessarily in front of my screen trying to trade, number one. Number two, the bias of the long from our team's perspective on the FOMC. Those are the main two items. Right? Now, is it the end of the world? Not at all. Why? Because they happen all the time. How many times have I posted this type of setups? So many, and I don't post them all because it'd be annoying. Right? Could have been a great short, yes, 100%. Like after the fact, it's like amazing, right? But at the end of the day, that long was a better trade than the short. But yeah, that's the kind of the reason, Tony.
Now, the one thing that really bothered me today is at one point after the open, the third shakeout, around the fourth shakeout. Now I'm starting to ask myself, is this going to be a down day? And I was a little bit worried.
Yeah.
What could you tell me after the third, fourth shakeout to convince me that we're definitely going long? I did stay in the trade, although I got stopped out and I re-entered. But at that point, I'm saying, is this going to be a downtrend day, even though Marco says we're going long? What could you tell me that, would have confirmed to me that, yeah, don't worry, we're still going back up. It's just manufactured selling.
Okay, this is a great question. I like that. Okay. So this is such an important and important psychological question. Exactly what you're feeling and what you felt is exactly what the market makers want you to feel. Like that's exactly it. Like they know how retail feel. They know when you're gonna say, fuck it, I'm done. It's too painful. That's what they want. They want you to go in and out, create a bunch of liquidity for them to take it up to new highs, right? So first of all, when you start feeling like this should kind of ring a little like ding, 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 ding. Like you should write those down, by the way, when those happen. Like this is why having a diary is so important, right? And it's kind of like, I'm starting to feel like that. Like, is this an emotion, number one? Or is this a fundamental news that's telling me that? Or is it a technical reason that's telling me that? Why am I feeling this way?
Or
and from that
intuition?
perspective, it's purely emotional, right? Because there's nothing technically telling you that you're wrong on that trade. And there's no news telling you that you're wrong either. It's purely emotional. Now, when you know and you get it out of the way, okay, it's purely emotional. Okay, let me see. Is there a fundamental reason telling me that I'm wrong? No. And last one is there a technical reason of why I'm wrong? And then you go into it. What do you look at? Well, we know that your stop loss, you're wrong when you go down here. Yes. Now, you know they're going to try to manipulate the price. Okay. So this is all good. It's normal. And then you look at RSIs. You see the market trying to go, and I'm just going to kind of erase a few little drawings here so you guys can see a little better. Trying to erase this. So you're seeing 1, 2, 3 kind of push down, right? And then you look at the RSI and you look at the conviction of those lows. And it's so, these, especially this one, it's like the conviction is weak. Well, they're not real. There's not a lot of real selling. Empty sells, empty selling, right? So you're seeing the price going like here when the RSI is moving up. Kind of a bullish divergence, right? So it's not telling. And then the last one down here, this one, you're still up on that trend, right? There's nothing alarming. Then this is from when? 11:57 to 10:45. So it's like this hour, that annoying hour, the painful hour, right? If you look here, where are you here? This is where you are. Anything alarming? Not at all. Anything alarming? Not at all. This is probably around here. Anything alarming? Not at all. I'm a little too white here. More here. Anything alarming? Not at all. On the opposite, you're moving up. Here, at that point in time, it wasn't alarming yet. like around here, right? This is what it was. So, and I could go around like more stocks, right? But this is the one that we had today. So on top of this, the correlation are not telling you that like you're in trouble, right? Probably look at Bitcoin, probably telling you similar things, right? So all of this is kind of telling me like, yeah, like I'm not wrong, right? So emotion out of the window. No news telling me I'm wrong. I know that I'm going to be hell manipulated psychologically by these institutions today. So just to stick to my guns, and that's it. That's kind of how I would see it.
Okay, sounds good. Thanks. I appreciate it.
That makes sense, Tony? Of
Yep, sure does. I appreciate it.
course. Awesome. Any other question, guys?
I have a question.
Yeah.
So obviously today, when Marco posted in the morning, he was talking about the 629 calls, and I was wondering if I decided not to go with this call because we went down a lot, basically. So I decided to pick the 625. Did I do the right decision, or I should have went for the 629s?
Okay, so let's look at the cues.
Well, because I went all the way down to 619.
What is that? Okay. All in on the 529. So you went super into money, or you
Yeah,
met, or you
529.
met,
Sorry, not
but
6.
he met 629. I'm pretty sure. Pretty sure he meant 629.
Yeah, 629. But I mean, when you
He
go
wrote
down all the way,
529. Yeah. Okay. Someone else. Yeah. He wrote. He
but
wrote.
but if it went all the way down to 619,
Yeah.
and I was patient enough when I waited, but should I have took the strike of 629, or with me I adjusted and I took 625 instead,
I
because
mean.
when
I
I saw
mean.
that was
Yeah. I mean. It depends on it's more like we would need to look a little deeper at the option chain at that time, right? And see like which one made more sense, right? Obviously, the
yeah,
629 was definitely cheaper at that time because the odds of it
well,
happening
probably like
was
3 cents or something.
correct. Correct. So if you knew or you had the expectation that we're gonna hit this triple top, obviously, if the goal is still the same, you try to hit that as a cheaper. Now, do you want to get both? Why not?
No, but
If you have the
the
size.
the the problem is that it took a bit of time for it to reach to that
And
target
then it
of
died off. He
exactly.
lost.
So I mean, I don't know if I had stayed in if I took the 629, would I have lost on that trade, or
I mean, if
you
you
know
would
what I'm
have
trying to
punched out
say?
when you if you, but you probably you would have made money you would have made money on the way up here because you punched out here. You punched out around
Yeah,
here, if I'm not mistaken, from what you were saying earlier. You punched out on
yeah,
that uptick, right? So
yeah.
you would have made money. Now it's a hard one to kind of assess without seeing the chain at that time. Um, but
Well,
yeah,
the idea is because we're so far out of the money. That's why.
yeah, and it's super cheap, right? If you do that, much cheaper. Now, sometimes you could just Marco does that too, and Marco does both. Like you would do both, for example, right?
Mm.
And see if you can potentially hit it. But seeing you would have been destroyed all the way here, right?
Yeah,
Would have to
that's what I'm saying.
rebuy on one of those dips. Then it's the same thing. Why would you buy on this dip, right? And you look at all the factors that we looked at, right?
Mm.
But definitely, especially if you go that far out of the money, when you see this kind of consolidation, you punch out and you try to re-enter. Definitely. Because you know this is going to kill you, right?
Yeah, yeah, 100%.
That's why it's like options is amazing in so many ways. but sometimes future is better. Is it hard? Is it easier or harder? Both. It goes both ways, right? It goes both ways. But yeah. All right, guys. I'll take another 5 minutes. Any other questions?
What's up, Nick?
What up? What up?
Yeah, I got a question. Maybe you covered this, but I wasn't here or whatever. On your EMAs, it's pretty minimal. You got only what, the 50 and the 200 there?
I'm not gonna lie. I never use EMAs, and they're just there to be there. I'm being very honest. I so rarely use them.
Okay.
Yeah. I'm just being very honest here. I don't. It's just. I think it's just the default that they're there, especially on stocks.
Am I right? Is that the 50 and the 200, or were you just
Yeah, that's the 15 200. Yeah, I mean 15 200 are good. I like him on higher time frame personally. I really like him because he kind of can tell you, but it's super laggy. I don't use EMAs to be
okay?
honest. I'm like I'm to be like for me technicals. I keep it simple. Volume profile, one indicator, not too crazy. I just look at like divergences, patterns, obviously, like liquidity, so on and so forth. I don't go too crazy on the indicators themselves.
All right, and again, if you covered it, sorry, but just your AVP, the ones that you're rocking right now, how far back are you going?
The AVP,
Your area volume profile.
yeah,
So,
okay. For which one, Nasdaq, or which one do you want to look at, or the
well,
Qs?
well, it seems like it's all the same like range. So like your blue and yellow one there,
Oh,
like
okay.
how
Yeah,
far
yeah.
back?
So this is a good question. This is visible range. So there's two types of volume, right? Visible range, which is this one. So when you look at it, is visible range volume
Yeah,
profile.
no, but
Okay.
the one, sorry to cut you off there. Just the one on your right, so your blue and yellow, that's your volume profile, right?
Yeah.
And so how far back are you going with that for the whole like quarter or
Oh, but
the
well, this no, but this is visible range, so it adjusts itself by where you are on the chart. Like it really, like it depends. Look, it's shifting as what is showing on the chart. So it really depends as I move, right? So the more I move, the more it's going to change. So look, it's going to change back, right? So
yeah,
it's different profiles. So there's no, it just depends where I'm at on the chart. See, like it's moving again. So
yeah,
it just, that's why it's called visible range. Whatever it's visible on the chart, it's what it's going to be showcasing. Now, when I day trade, I use both personally. So I use, for example, the daily range to assess my market profile. And I also have a visible range just to see the overall profile whenever I zoom out, if that makes sense.
yeah, it makes sense. I guess I'm just getting confused with what I'm using on because
Yeah, so
means the
two things,
HD.
right? The HD is for the session. Okay. So every session, meaning when it starts at 6 p.m. all the way to the end of 5 p.m., 6 p.m., 5 p.m. It gives you the session, right? It's volume session HD for the session. So the profile is for that specific time from 6 p.m. to 5 p.m. every day. This is for the visible range of the whole chart and it shifts, right? This one
Right.
doesn't shift. Make sense?
Yeah, sure, for sure.
All right, guys. Awesome. So the more question, we're gonna get it going. We're gonna close this off, and I'm gonna watch the next two pairs of the halves and see how the new kid on the block is doing in the net.
I have one last question, but it's not on
It,
technicals.
yeah, go ahead, brother.
So let's say you're dealing with the leveraged ETFs
Yeah,
and you're down like 80% because you didn't get out earlier and you didn't
yeah.
respect your stop. But what would be the right thing to do? Like would you get out or How do you
Okay,
like?
yeah, this is like a longer. It's not like a simple black and white answer because it kind of depends on
Okay.
many different things, right? It depends on like what's the size of your account, how much risk did you put on that single trade. Was that just a scale in? Is this like, or are you over risking on this one?
Okay.
Like it depends on many factors. It's a great question to ask yourself. Like it's a great question to ask yourself. It's just it depends on kind of your case. What was it exactly, right? If you're like, because there's different ways of seeing it. So it's like I'm gonna get kind of a FOMO lot, get in as a smaller size, and then if you're willing to enter different sizes on that trade, maybe you're just piling on a better price, right? And add another one. If you're like, hey, like first of all, 80%, like it's you're almost losing it all at this point, right? Losing 80 or 90 or 100% on that option position. This point doesn't change that
No,
much, right?
it's not option. It's not options. It's the ETF,
Oh, the ETF itself.
the leverage
Oh,
ETFs, like
oh,
Sol T, for example.
overall. So overall, I mean, yeah, this is
Because
this
if
is a
I
deeper
hold
problem,
it,
right? This is the deeper problem. Okay, I hear you. I hear you. I hear you. I hear you.
well,
Yeah, I
let's say it's
mean,
not 80% because I average down a bunch of times, but let's say it's 50% now. Would you
yeah,
like
I mean,
just cash out and just find a better opportunity, or you hold it until it goes back?
this is where the emotional trading gods are gonna test you. Okay. Because you always want to ask yourself, like, why are you getting out? Right? And you want to try to be as consistent as possible. And in that case, you're if you truly think that crypto bottom there, they're gonna go all the way back up, especially with the more dovish-ish Fed, with XY, everything we've talked about, you're wrong punching out. Because you've been through all this trouble, fucking keep going at it. Now, can you de-risk? Meaning, okay, like I'm gonna punch out a little bit at least, so I don't like really go back down to it,
Yeah,
Sure, okay. If you
because
would
that
have been in a
because the
case
thing is, it
where,
needs to go up like 200%.
correct. So if you're like, look, on that trade, I'm losing X, sure. Now, if you'd be in a case where, okay, I'm at 50%, there's a lot of risk that, we start tanking from here, then it makes sense to just, punch out and say, fuck it, I just lost, right? Now it's like,
Hmm.
how much were you, like the bigger question is, now you're reacting to something, but like, why did you let it go 80%? That's the bigger issue. Making sure that doesn't happen again, right? Because you
Well, I
should have
wasn't at
punched.
idle top at this point.
No, but I'm not saying this in a judgy way. I'm just saying like
Yeah, I
I'm just
know, I
saying
know.
it's just like the bigger. I understand it's kind of a tough one, but first of all, you should not be in that position. But it's okay. That happens, right? We've all been there. I've been there too. And it's kind of like, how do you want to manage this? Well, first of all, psychologically, you want to get out for a real reason. If there's no real reason, then write it out. Then it's like, okay, how much risk is that taking? If you're over risk and it's not helping you sleep at night, sure, get out of it, right? If you can handle it, it is what it is, a small portion. Then you want to stick to your guns and be like, my analysis is this. I just need to make sure that, okay, I don't want to lose more than X, or like it depends, and we can chat about it like together one on one after. But it's more of a case to case basis. It needs to go deeper than just me telling you like, yeah, get out now or go on now, right? But at the end of the day, if the structure of the
Yeah.
trade hasn't changed and we think we're going to go up, then you have your answer.
Okay.
Okay.
Thanks.
Pleasure. All right, guys. Have a really good night. That was a cool session. That was cool. Do you guys like it?
Oh yeah,
Yeah.
it's perfect.
Yes, very helpful.
Thanks for initiating this, Nick. It's very technical and very comprehensive.
You're welcome, guys. All right. Have a wonderful rest of your night, guys.
Thank
Thank
you.
you.
Thank you.
Bye.
Bye.
Take
Ciao.
care.
You
Ciao.
take care.
Bye.